What's up, my people? It's Kiwanis, your credit and tax advisor. Today, we are talking all about the differences between a tax credit and a tax deduction. If you've been watching my videos lately, we've been talking all about tax deductions and credits. I have a video on standard and itemized deductions, and I also have a video on the role that tax deductions play in your tax returns. Now, if you haven't seen those videos, make sure that you go take a look after you watch this video. I hope that you found value in this video and consider subscribing to my channel. Also, now is a great time to start preparing to file your taxes. If you need a tax preparation checklist, I have linked one in the description for you. So let's jump right into today's video. So let's start by defining what a tax deduction is and then what a tax credit is. So tax deductions lower your taxable income and potentially reduce what you'll pay in taxes as a result. Now, tax credits reduce your tax bill dollar for dollar and may even increase your refund. Now, there are four key differences between a tax credit and then a tax deduction. So both tax credits and tax deductions reduce the amount owed, but in different ways. So now a tax credit can reduce the amount of tax owed by lowering your tax liability or the amount owed. Now, tax deductions will reduce the amount of income that is actually can be taxed. So the second difference between a tax credit and a tax deduction is how many of each that you can claim. Now, you can claim multiple tax credits as long as you are eligible for them. Tax deductions are only available in itemized deductions and then standard deductions. And you can only choose one. So you can only choose tax standard or itemized. The third difference between a tax credit and a tax deduction is their types. Tax credits are either non-refundable or refundable. Tax deductions are available again either in the itemized deductions or the standard deduction. Now, the final difference between a tax credit and a tax deduction is the possibility of a refund. You may receive a tax refund if you receive enough refundable tax credits. Tax deductions may not result in any tax refund unless deductions reduce your income to where you are overpaying the estimated tax payments or tax withholding. So some of the common examples of tax credits are the Child and Dependent Care Credit, which allows taxpayers to receive reimbursements for their expenses for the care of a qualifying dependent. You have the child tax credit. The child tax credit is offered for a child dependent under the age of 17 before December 31st who lives with the taxpayer for at least half of the year and provides their income. Earned income tax credit, a refundable tax credit available to low and moderate income workers. You also have the premium tax credit, a refundable tax credit available for families and individuals that covers your health insurance premiums offered through the health insurance marketplace. So if you get insurance through the marketplace, you could get that credit. And then you have the qualified plug-in electric drive vehicle tax credit. This is if you have a vehicle that you plug in, you can get that credit. You have a savers credit, which is the credit for taxpayers who make eligible contributions to their employer-sponsored retirement plan or with the IRA. So if you have a 401k or through an IRA, you can use that credit. Then you have the work opportunity tax credit. This is a credit for businesses who employ people and it expires through 2025. This credit is for employers who employ in 10 targeted groups. Now, you can choose a standard deduction, which is a fixed amount to reduce your taxable income, or you can choose to do itemized deductions on your taxes. Some deductions that you can take when you itemize are charitable donations. So if you give to the Goodwill, You can do interest payments, medical and dental expenses, education expenses. If you're a small business owner, you can receive a tax deduction for different business expenses like, again, charitable donations, equipment, license and regulatory fees, taxes that you may have to pay, any kind of vehicle expenses. So credit and deductions can help you ensure you aren't paying more than you need to when you're claiming these credits and deductions you're eligible for. It may help to reduce your bill or increase your refund when you file your taxes. However, each individual situation is definitely unique, and you may want to consider consulting with a tax professional for preparing your taxes and then filing them to ensure that you are utilizing the most efficient strategy for your situation and getting the biggest refund possible. I hope that you have found value in this video. If you have any questions, make sure that you leave those in the comments. Until next week, be safe.